Alright, so going into the day today, let's look at the daily. Looking pretty bullish. So I was pretty much looking for longs today. In the morning we were holding this 1 hour on both NQ and ES. ES ended up holding this the entire day, but NQ, if we go into the replay, let's go 15. So we start to form this little internal model here. This was early in the morning, like 7 a.m. So in the morning at 9 a.m. I was basically just expecting us to pump up in the open. But that doesn't mean there's any setup available for me, but we actually ended up taking this high on ES. So we formed this big SMT here. Came a few ticks off from taking that high on NQ, and then we ended up pretty much selling all the way off. And from this I was looking for imbalances here to sort of take longs from if we were going to form some internal models. We didn't form anything, so I didn't take any trades there in the morning. Once we displaced through this low and through this 1 hour fair value gap, that's when I sort of stayed on the sidelines. But now I was thinking, like, alright, if we displace through here, we might start to see our way down to these sell side levels this low here. So still wasn't going to take any trades, but we look at the 1 minute, and right here we just see this chop, right? This consolidative phase. We're just up, down, up, down, up, down. But if you notice, none of these lows are getting taken. I mean, I guess you took this low, but for the most part, you're generating all of these sell side levels, right? So none of these are getting taken. We have basically this like trend line I expect to get completely ran through. We also formed a bearish 1 hour fair value gap. Where is it? So we had this bearish 1 hour overlapped with this 15-minute fair value gap. So I was looking to see if we were going to form a little internal model here to take a short from. And so we had all of these stacked highs here. We ended up coming up. This was just before lunch as well. We ended up coming up, taking this high, and then displacing lower. We had this little 1 minute fair value gap. Took a long here. Stop was somewhere around here. I think it was above this high, maybe above this candle here, but either way, displaced all the way down, and I targeted the bottom end of this low resistance liquidity run, expecting that once we start to break through these lows, we're just going to rip through all of them. That was a pretty good trade. I was even thinking about adding in here, like in this, I think there was this 1 minute here, yeah, right here, and I was journaling this sort of like, if I was going to add, how would I have done it, right? Because you have this 1 minute and you have this internal model. We take this high, market structure shift, displacement through, and I was looking to take a short in this fair value gap. I'll just move this over because this is the discounted one. Right as we press down here, I wanted to see us come into OTE of the range, but what I didn't realize was we had this inverse here, and we kind of came below and then basically tapped right into this inverse and immediately sold off. Regardless, it's fine. I got a great entry, great trade, and then it just flushed right into my take profit, so I was up pretty good on the day. I actually forgot to mention, before I took this trade, I took a trade on ES. So I'll go over to ES. So in the morning, we basically ran up, took this buy side level, right? I spoke about that before, how we had this big SMT. Pretty like big differences between ES and NQ this morning, but if you look here, we have this 5-minute breaker. This is the 1 hour fair value gap that we're holding this entire time. So if we didn't take this high, I think this would have been a great place to look for a trade. And I think the trade that I ended up taking would have been a much better setup, because we have OT of the range. I mean, at this point, since we took the high, it wasn't really OTE. Maybe if we, came up here and then retraced down, it would have been much better. But regardless, we came down into this breaker. We had a little internal model, little unicorn entry. This would be your breaker, right? You come down, take liquidity, bounce back up. You also have the 1 minute fair value gap in here, which I ended up taking. This one right here is OTE of this range. But the reason why this setup isn't good is because we already took the external high of this setup, right? This would be your sell side, buy side of the curve. This is the external draw. I expected that we were going to go all the way to these highs today, or maybe even into these highs inside of this 15-minute. So I think this setup would have been better if we didn't take this high. Now granted, we didn't even have really a great internal manipulation. We did have an SMT here at the lows, which was kind of why I wanted to take this setup off of this fair value gap, but we ended up having another manipulation move down here. I took a low size. I was only trading 1 micro, so it was like a $15 loss, whatever. I was okay with putting that risk on the table. I was okay with losing that, but yesterday we had a very similar setup and it worked out great. So I was like, hey, let me, if this works out again, I'd like to be a part of it. Let's see what happens. And ES basically ended up just shitting the bed the entire day. And it actually held this breaker the entire day. I think it was more so the fair value gap, but either way, I'm pretty surprised that we didn't end up taking any of these lows. I guess that'll just become liquidity for another day. But so I had that little loss, and then I took this win. This was also 1 micro contract. So I was, percentage-wise and things like that, I was up pretty well on the day. But later in the day, I thought this setup was absolutely beautiful, but unfortunately, I did not win this trade, but I am not upset with this trade at all. So I'll put NQ side by side so we can see on different time frames. But so we had lunch, right? So during lunch, we basically consolidated. Before we look at that, let's go to the 15-minute. At this point in time, after displacing all the way down, rebalancing here off that original short that I took, and then we continued to displace lower, and we had, this 15-minute fair value gap and whatnot. I expected at this point the draw on liquidity are these lows. We have, 1, 2, 3 stacked lows. We have a 15-minute fair value gap here. We have consequent encroachment of this wick. I expected us to sort of pull back into here before forming some sort of internal model. I really expected us to take out these lows. But again, I guess that will be liquidity for another date. So all the time through here, I was looking for an internal sell model. The problem was this is lunch hour, so I expected this to sort of be choppy, pretty garbage. And if you see the fib, this 5-minute fair value gap, although it's pretty small, this is OTE of the range, and you have like a little order block here. So this is, I was pretty much expecting this to hold, but there was no good opportunity that presented itself in that fair value gap. This is where the opportunity presented itself, so that's the one I went with. We also had a pretty massive SMT here. Let's see. So we had this high in the morning, or 11:25, right there to there. So we took that high on ES right over here. So pretty obvious SMT, right? ES comes up, takes this high, starts to displace lower. ES or NQ nowhere near taking this high. So once we form that SMT, let's zoom in. Let's see the structure of what's going on here. So we got all of this generated liquidity, pretty much same thing as here. This one was a little bit cleaner. Just using like a trend line, you can see like all of these lows, people are definitely stacking their stops right below these lows, so you would expect it to get ran through. Here, not as clean, but you had all of this low resistance liquidity, this up here, on smaller time frames. These are all lows that haven't been taken. And then you have this low here, little fair value gap there as well. So I expected all of this to get ran through, this to be the draw on liquidity, and I was going to take my order off here. This was my take profit at this low. So zooming in a bit further, another thing to note, we come up SMT, we reject a bit, and we're still chopping. We come up, take this high, we start to reject, and I didn't enter on a fair value gap. What I did was I wanted to enter before this low gets taken, because I just when I see these liquidity runs, a lot of the times, at least that I've seen in my small amount of experience, it's almost like once you start ripping through these lows, there's just no retracement, and you can see we just straight line to the downside. I mean, you could have entered here, but why would you? I would have probably waited for this. So I wanted to get in sooner than that. Once I saw that we were invalidating some other fair value gaps, let's look over here. We had this 1-minute bullish fair value gap, and let's just go to a smaller time frame. So this is the inverse 1 minute. You can see we came up, tapped it, came up again, internal high taken, ripped to the downside. We have this 15-second here. We also have this 15-second right here, right? So as we started ripping to the downside, I just went short right here, and the ideology behind that was I really was confident these were going to hold. I wasn't confident that we would retrace into them, so I wanted to just get in short, and I really was confident that this high was not going to be traded back into. So my stop was just slightly above the high, just to clear this inverse. And basically we straight lined to the downside, and ended up not hitting my take profit. The reason I didn't take my trade off here was because a few things. We had a 5-minute fair value gap right here. I'll just move this order to the side for a second. So we had our 5. You go into the 1. You know, you have this 1-minute fair value gap right here. You have a 1-minute fair value gap right here. And if you take the fib, this is your OTE entry in the first place, right? This itself looks like a great entry if you come back here targeting these lows. I think like 9 times out of 10 this low gets taken, so I was really confident that this was going to get taken, and this little internal buy model here was just to retrace into a fair value gap before going back lower. So zooming in, I was actually going to add to my trade here. That's how confident I felt. So just looking for an internal model, right? We ended up kind of blowing through these fair value gaps. We come into this 1-minute fair value gap in OTE of the range. We have our little high taken. We displace lower. We disrespect this fair value gap, which becomes inverse. We also have one here. I was actually about to add to my position here, but I was kind of like cycling through time frames, you know, like this, and I didn't really see the fair value gap until this wick happened and we started pushing lower. So I was like, all right, I'm not going to add down here. That was the entry. So I had my original short somewhere. It was like over here. I was going to add to my position right here, and what I would have done was I would have had this stop loss right here, and this stop loss would have came to this high as well. So my original stop was right about here. It was like 12-13 points. If I added to the position, the stop loss would have been just about 11 points here, you know, just about 5 points here. So my risk would have actually been cut in half, and my profit would have been, you know, nearly doubled, right? So in my opinion, looking at the replay mode, not looking in hindsight, this looks beautiful. This looks like a great setup, great place to add. I didn't end up adding here, and as you know, the trade doesn't end up working out. This buy model continues to play, and we end up moving back to the upside. And once we were about here, we broke through this fair value gap. I knew I was getting stopped out here, but you know, I put risk on the table. I'm not going to just flatten my position right here. You know, what am I saving? A couple points. Like, I just assumed, you know, I put risk on. Who knows? We could take out this high, have our internal model here. You know, this was my plan. I'm going to stick to it. Whatever. I ended up getting stopped out. So 2 losses, 1 win, but up, you know, pretty good on the day. Again, I was only trading 1 micro contract for all of these trades. That's what I'm doing as I gain conviction and try to find consistency. But I journaled this trade, and I am not upset with this trade at all. I did say in my journal, though, if I was trading, let's say I was trading 3 contracts, right? Like, this isn't hindsight. I actually took a recording, like a live recording, and I was talking about this low, and I was saying, in like real time in the recording, I was saying this low I would definitely take profits or a partial, and the reason being is you have that low fair value gap, and it's in discount of this range, OTE in fact, of this range, and it's also like if you're talking about like this trade here, the end of the low resistance liquidity run that I originally targeted down here, this is basically the end of the low resistance liquidity. So like you know, I was very confident we would come down here, and the reason I was more confident that we would come down here as well is because I just thought that all of these lows and this fair value gap was going to be the draw on liquidity. But if I was trading a couple contracts, I would have taken a partial here. So just a thing to note. And I think, you know, maybe for next time, since I am only trading one contract, if I take a short in here, instead of targeting the external level, I should target the low-hanging fruit, you know, secure my win, secure my, you know, my money or whatever, and then watch the trade play out. And over time, you know, as I see the external levels get taken often, that will give me conviction for when I have more contracts in order to leave runners. But I think, you know, ICT says it in his videos, you should just be taking low-hanging fruit, what's given to you, you know, take your little piece, and, you know, later on down the line, you know, as you get better, you can then look to target the external levels. And I think it makes sense, right? If I'm trading one contract, you know, look what happened. I targeted here, I was up, you know, what is this, 56 points, and then I ended up losing, it was like 13 points, right? So I was up 56, and then I lost 13, when I could have just made around 40, right? So it's like, if I had more contracts, I would definitely take profits here. So why wouldn't I take profits with just one contract? And the reason being is probably emotional, right? Like I want to make more money, but that's not the right mentality I should be in. I should gain conviction with just taking these trades like this. Like, that's a beautiful, beautiful setup right here. And then I could have been writing in my journal, you know, great job, beautiful setup. If I had more contracts, I probably would have gotten the rest of those stopped on break even or something like that. Right? But instead I have to write in my journal, great job, but I should have taken the low-hanging fruit, right? It's a lesson I seem to not learn, yet encounter extremely frequently, where I don't take low-hanging fruit and I end up losing. So either way, I'm not upset. I think this is a great trade. I think 9 times out of 10 these lows get taken. But if you zoom out, look what we have now. You know, we have all these lows. I don't know when, but at some point I do anticipate us to really rip through all of these stacked lows that we have here very aggressively. So, you know, this is a low resistance liquidity run on a higher time frame. So hopefully when that move does happen, we could capitalize on that. But either way, I came out green on the day. So that's my recap for February 6th of 2024. And yeah, See you guys in the next one. Peace.